Hello everybody, this is Lara from Pure Elliott Wave with your free daily update for Bitcoin, Ethereum and XRP. And as always, before I get into it, if you're not subscribed already, do so that you don't miss my Monday to Friday updates for these big three cryptos. Getting into Bitcoin first, you've asked me to look at monthly charts. I'm going to go over my Elliott Wave counts for Ethereum and XRP. I can't do that for Bitcoin because that's a subscription. So this is the entire price history for this market. First thing I want to note is volume follows price. Volume up to this high, well actually not the all-time high, there was a bit of weakness there, but up to this high in April 2021, volume was at its peak. We saw some bearish divergence here and some weakness at the all-time high. So it's unsurprising we got a bear market of over a year. It looks like that's over now though, and the next bullish run is in its very, very early stages. The second thing I want you to really understand by looking at this chart is you're in a really early stage of the next bull run. So you're the equivalent of here, or the equivalent of here, or the equivalent of probably somewhere about here. So there's a long way to go. Overall, this market has a very strong bullish bias. At this time frame, there is still a series of higher highs and there is a series of higher lows. You would have to have, possibly this would be the last low before the all-time high. So if you see this low taken out, that's not a break of that pattern. You need to have this low taken out, 4106.98, the low of February 2020. If that low is taken out, then the pattern is broken, and then you have a change from bull to bear. We don't have that yet. Assume the trend remains the same until proven otherwise. So a whole bunch of little technical principles in there for you. But the one I want to show you with this chart and focus on today, now I've shown you this before, but I'm going to do it slightly differently today. These shaded boxes represent consolidations. The technical principle is the longer the consolidation lasts, the longer and stronger the resulting breakout is likely to be. Now, this is a technical principle that works more often than not, and it doesn't work all the time. None of this works all the time. What we are dealing with here, as always, is a balance of probabilities. Nothing is certain. If something were certain, we'd all be multi-billionaires, but we're not, sadly so. A technical principle works most of the time. This consolidation lasted 22 months, and the resulting breakout from the point, the high of the consolidation, so $31.91, to the eventual end of the resulting following bull run at 1241.92 was a 37.9 multiple from the breakout point, and it lasted just 8 months. So it was over relatively quickly. So 22 months consolidation, only 8 months for the following bullish run. And it multiplied price 37.9 times. So that was a fantastic result. Next, we get a huge consolidation that lasted 43 months. So this is a longer consolidation. We would expect a longer and stronger bull run to result. We didn't get a longer bull run. It was over in, again, just 8 months. So it was very sharp indeed. But it did multiply price from the breakout price 151.4 times. So a longer consolidation led to a stronger breakout. Next we get 38 months, so not as long as this one, but longer than this one. So now we've got something in the middle. It was a fairly long consolidation, 38 months. The breakout, 19,870.62 on this month. And then we get a bull run up to the all-time high, but it was only a 2.5 multiplier of price, and it took 11 months. So it was longer, but it wasn't stronger. So this is the exception here that doesn't meet the rule. So it doesn't work all the time, but it will work more often than it fails. Currently, the current consolidation has lasted 37 months. It'll be over when we see a close to a new all-time high above 68,789.63. If and when that happens, then we'll have a good solid knowledge of the duration of this consolidation. It looks like it's going to be longer than this one. It could be longer than this one. If that's the case, if it's longer than the previous consolidations, then on balance of probability, we can expect it's likely, more likely than not, to be a longer and stronger resulting bull run. So it could be about 38 times a multiplier of price. It could be over 150. We don't know, and I can't tell you what it's going to be, but the basic technical principle tells us that when this is over and we see a breakout, we should expect a long, strong, bullish run to follow. I would expect it'll be over within a year. When it does happen, I'll expect it'll start to curve up with parabolic growth and have a massive vertical spike and a blow-off top. That's coming up, maybe in a couple of years. For the very short term today, Bitcoin is breaking out upward, not downward. We're not getting a pullback yet, but let's look and see how much strength or weakness there is. First of all, let's look for next resistance for the short term at 41,000. Look now for support for any pullbacks at 35,000 initially. If it breaks below that, 31,000. And the upcoming deeper pullback that I'm expecting to come sooner rather than later now, I won't expect it to move much, if at all, below about 29,000. I think that's where it's going to find ultimate support, and I think that because that looks about right in terms of a percentage retracement, and also is where there's very strong support. I can't make a conclusion on volume for today because we're still early in the morning, just 9:15 as I record this, but I can say that overall volume is weaker, and day on day, well, for yesterday, it is declining as price moves higher. So there is some weakness now in this upward movement. There's a short-term bullish signal from on-balance volume. It's so short-term it could well be resolved, or the signal could be telling us, yes, there's this upward breakout. It's confirming the upward breakout. It may not necessarily be followed by too much more upward movement. This trend is now very extreme. RSI reached deeply overbought. It exhibits single bullish divergence. Let's see how it closes today. If we see another pivot, if we see a downward session tomorrow, there'll be a pivot, and then again I'll look for divergence. We could be looking to develop double or maybe even triple bearish divergence before we see a deeper, more sustained pullback. So this movement could continue higher. Look at those resistance areas above, but just be aware there's extreme conditions and there's weakness in volume. Also weakness in money flow with bearish divergence. Let's look at the Elliott Wave counts for Ethereum and XRP. This is the entire price history of Ethereum, and the XRP Elliott Wave count's pretty much the same. From the inception to this high here in January 2018 for Ethereum, I see a 5-step forward pattern. 1, double zigzag for 2, 3, triangle for 4, fifth wave. This is on a semi-log scale, so it's a little bit hard to see, but the third wave is obviously longer than the first wave. It's 19.36 times the length of the first, and the fifth wave is $81.51 longer than 2.618 the length of primary wave 3. So the fifth wave was over in just 3 months, but it travelled more than 2.618 the length of primary 3. This is the strongest movement, and this is almost universal, not completely, but almost universal for impulses for cryptocurrencies, and practically universal for third wave impulses for cryptocurrencies, for their fifth waves to be the strongest, quickest movement where the most profit is yielded in the shortest space of time. So that's the one we really want to hang out for and look out for. This big bull market lasted 29 months, and it was followed by a bear market of just under a year. That was a 94% correction in market value. I'm labelling this cycle wave 2, it's a double zigzag. Following 2, we see 3 begin. Cycle 3 may only subdivide as an impulse. You can't label it over here because this can't be labelled cycle 4, because 4 may not enter wave 1 price territory. So this yields a really bullish wave count. I'm labelling this impulse here primary 1, and the following zigzag that lasted 6 months, primary wave 2. So now we're looking at a third wave at primary degree within a third wave at cycle degree. Now it's going to be a larger fractal of this. This is a big third wave at primary degree. We're looking at a big third wave at cycle degree. It's a huge extension. So primary wave 1 is already quite long. I'll be expecting primary wave 3 to be even longer, possibly in time, but certainly in price, not necessarily in time, but it looks like, because it's starting out quite slow, looks like it will be rather time consuming. I expect it to form a nice growth curve of parabolic growth. So it starts out slowly, accelerates through the middle, absolutely explodes at the end. I'll expect the end of primary 3 to look like this, vertical upward movement lasting maybe up to 5 months, I'll expect it to be extremely strong and travel a great distance with huge volume at the end. I expect we're probably not going to see these markets make headlines until they get close to their all-time highs. They've been going sideways in a consolidation for such a long time, for over a year, and we're only just starting to move up above these highs back from April 2023. We're not quite there yet. We're getting close. So they're not making headlines at the moment. Most people's attention is diverted elsewhere, but this is where I expect we're going to see the next massive parabolic growth and possibly major intergenerational wealth made for people who have bought early enough, hold on throughout volatility, and sell at or toward the end of these third waves. Super quick look at technicals for Ethereum today. It too is breaking out upward. Look out for next resistance at 2020. It's still in an upward trend with small consolidations along the way. Let's have a look and see what these conditions are under the hood though. The last session completed showed upward movement but a decline in volume. Cannot make a comment about this very last session because it's incomplete. It's still just after 9 in the morning. Ethereum's reached somewhat overbought and exhibits weak single bearish divergence. This could just get further overbought. It could exhibit double and triple bearish divergence before the bullish run is interrupted by a deeper, more time-consuming pullback. But this bearish divergence is really quite weak, so I'm not going to give it actually too much weight. Ethereum's got quite a ways to go before it's as extreme as it can get. ADX is now pretty extreme. It's above 50, but it's not as extreme as it can get for this market. So we've got an upward breakout, we've got extreme conditions, we do have some weakness in volume and some extreme conditions, but not as extreme as it can get. Look out for next resistance at 2020 above. The full price history of XRP is pretty much the same for my Elliott Wave count. A 5-step forward pattern here, a 3-step back pattern here, looking for the next big extended 5-step forward pattern. This is a third wave at cycle degree. Third waves for these cryptos are almost universally extended, long, strong extensions with parabolic growth ending with blow-off tops. So that's what I'm going to look out for cycle 3. Within cycle 3 I have primary 1 and 2 and now looking for the early stage of primary 3. And then we'll have primary 4, which may not move into wave 1 price territory, and finally primary 5. So we're looking for a longer, stronger version, a bigger version of this 5-step forward pattern. So 1, 2, 3, 4, 5. And it'll be the 5th wave again, which is expected to be the strongest, longest portion in terms of distance travelled, but not necessarily longest in terms of time taken. So huge, massive momentum, vertical upward movement. I'll be looking for the primary 5 to end cycle 3. My first target here for XRP is $8.10 for primary 3. That's where it may reach 4.236, the length of primary wave 1. Let's look for it possibly to last a Fibonacci 3 years. If it does, it'll end in June 2025. This potential target I think is woefully inadequate, but it's possible. XRP within cycle 1, primary 3 was only 4.37 the length of primary wave 1. I expect this primary degree third wave will be a lot longer because it's a nested third wave within a third wave at a huge degree, at cycle degree. So I think the target's a bit low. But anyway, within primary 3, no second wave correction may move beyond its start below 0.2794. At that point, the wave count would be invalidated. While Bitcoin and Ethereum are having really good upward days, XRP did that a few days ago and now it's just having a wee rest, moving sideways with so far a little doji. Look for resistance above if we do see a little upward breakout at 82. After the dark cloud cover of a couple of days ago, now we're just getting sideways movement. It looks like this dark cloud cover, bearish reversal pattern, is telling us that we're only just going to get a little sideways pause and not a 180-degree trend change from up to down. And that's one of the problems with candlestick patterns. There are two things they actually don't tell us. They don't tell us what is the direction of the next trend, and they don't tell us how long that trend is going to last. So they're not telling us if we're going from up to a full 180-degree down or to sideways, because there are 3 directions for price: up, down or sideways. They also don't tell us how long the next trend is lasting. So they don't tell us if we're going to get a change from up to a big downward trend or from up to a little few days of sideways movement. You have to put it in context with everything else, so let's do that. Dark cloud cover didn't have push from volume, but bearish patterns don't need it. The previous to that, volume is strongly pushing price higher. For XRP, we're not seeing weakness at the last high. ADX is now very extreme, but it can get further extreme. RSI reached deeply overbought, but there's no bearish divergence. So there's a little ways to run before this trend gets into real danger territory, and we should look out for a deeper pullback. That's it from me with quite a bit for you today. I've run over my 10 minutes. I'll try and edit it down as much as I can, but I wanted to look at those monthly charts with you today. Sometimes really good idea to step back and keep your eye on the bigger picture and what it means. Hope everyone's having a lovely day.